You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time, once again, for a little program we like to call around in these parts, the Option Block. Everyone's favorite. I hope it's your favorite. It's certainly my favorite bi-weekly source for all things options related. A little bit of options wit, a little bit of wisdom, some analysis, some education, some unusual activity, your questions, our comments, our peering into the future, all that mixed together with some strategy, and you get the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever exciting Options Insider Radio Network. 15, count them, 15 programs available for your listening pleasure there on the old network. Quite a few of them coming out this week, so stay tuned. We've been recording like a madman. Not all the shows stream live yet, only a handful for now. It's kind of still a little pilot, but we do, of course, by the way, since we're talking live streaming, you can join us every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixlr. MIXLR, to get the show live. I know a lot of you guys like to get in there, the raw, the immediate, the hardcore, how the sausage is made version. Well, there you go, have at it. That's for you guys. And of course, a lot of you guys like to listen on demand, on leisure, at your leisure, I should say, on your own schedule via iTunes or TuneIn or Stitcher, and now iHeartRadio picking us up this week. So they're adding podcasts now. So more outlets, Google Play a couple of months ago. So one by one, all the outlets getting knocked down here for the Options Insider Radio Network. So no matter how you like to listen to us, we encourage you to do so. You can always grab our mobile app as well, available for iOS, Android, and the beloved, scintillating Fire OS. I want to have someone write in one day and say, hey, I use the Fire OS version of your app, just to hear from the two of you out there who do that, because not a lot of Fire OS out there users. Surprise, surprise. And of course, no matter how you listen, live stream, after the fact, on the app, however you get it, we'd love to hear from you guys. Send in your questions, send in your comments. You guys have been lighting us up with some great questions, some epic questions. So kind of interesting. Mr. Rock Lobster in a few of those questions these days. So we'll see if we have a time to get to a few of those this week. And speaking of the aforementioned Rock Lobster, let's welcome on the rest of my cohorts here, my partners in all things options-related crime. Starting off with him, he is back. He's taken up all the bandwidth in Maine yet again. The Rock Lobster himself, Mr. Andrew Giovinazzi. Welcome back to the program, sir. You certainly seem to inspire a lot of heartfelt and lengthy email missives to the shows these days. So well done, sir.
I don't know what it is. Maybe they like the folksy they like the folksy lobsterness as opposed to the folksy St. Charlesness, I guess. I don't know how that works. I don't know.
It is something. You're setting people off, both good and bad. I hate the Rock Lobster. I love them. More on the former than the latter. Actually, more on the latter than the former. So that's a good thing. And of course, I'm joking. And then, of course, also joining us, the aforementioned Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, we actually had Auntie Mike on the network this week, a.k.a. Federal Holiday Mike. It is a federal holiday coming up. Maybe that's why he was on. But that was a rare tweet as well. So we've had both Mikes from RCM on the network this week.
That's always exciting to know that Mike still exists. Kavanaugh is a good man. Good to hear from him again.
He does still exist, and we have the audio proof to prove it. It'll be coming out later this week, so you guys can check it out as well on our Advisors Option program. But for now, it's time for us to get rolling with this program and dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. As the name implies, this is indeed the portion of the program where we tell you what's moving, what's shaking, what's lighting it up here in this first trading day of September. We are technically, at least on the calendar, outside of the summer doldrums, but realistically, we have the Labor Day weekend coming up this weekend, so a lot of big market players are not going to be putting on a lot of size, or maybe not even back in the office yet till after the Labor Day holiday weekend. So I think we have to really look to next week to see exactly what's in store for us from a market perspective. Probably still going to be a little bit thin and light throughout the rest of this week. Of course, we do have some numbers coming up later this week that will keep people on their toes at least through tomorrow. We'll get to more of that, of course, in the Around the Block. As for today's activity, we actually had a wee bit of a range out there in the S&P, dripping a little bit, down all the way down about 2157 before rebounding, closing today right around a little bit south of 2170. So a nice little rally towards the latter portion there to close, effectively unched. But that kind of belies some of the activity we had intraday. Not the biggest range we've had in a while, obviously, but a little bit of a sell-off weighing on a lot of the indices at the end of the day. Of course, most of them closing pretty much unched on the day. So close to close, not a lot happening though. Intraday there was a little bit lower and a little bit of red going on the screen. A lot of that coming, of course, from some of the weight coming on WTI and a lot of the energy names weighing on them. Of course, nat gas supplies also a little bit stronger than expected. So that combining for kind of a 1-2 punch in the energy and energy-related sectors, kind of taking it on the chin out there as well. We also saw our friends out there in the much ballyhooed Tesla getting ballyhooed yet again, this time to the downside, a thorough drubbing out there in Tesla land, off over 11 handles, 11 and a quarter or so, down about 5%, about 5.5% actually, hovering right around that mythical, magical 200 level. Yet again, what a couple of months it's been for Tesla, flirting with 250, and then of course back in early June they were south of the 200 level again. They were about 189 or so, and 187 actually, and then rallying hard north, and now kind of a 1-2-3 punch seems for Tesla. SpaceX, not exactly the same company, but related, obviously under some similar ownership. Then, of course, we have some other issues going on with the Solar City acquisition and all the other allegations against that deal, nepotism, and not to least to mention with, of course, the cash flow issues that are becoming inherent over there at Tesla. A lot of issues kind of coming to the fore there. So that also kind of weighing on the street a lot today. So a lot of combo things. We'll get to some earnings in a little bit, some options volume. But first, let's see what our cohorts here are paying attention to. Mr. Rock Lobster, we were talking to you before the show here, and you were saying that Tesla was kind of lighting it up over there in the pit chat. So let's start there. What caught your eye with your pit chatters out there in Tesla land, as well as what else is catching your eye today, sir?
Well, Tesla itself looked not good. Well, SpaceX, I guess they had an explosion on the launch pad. Some of my listeners were telling me this morning, plus the SCTY, it's a lot of kind of bad news. The stock looks like it's been under pressure, maybe from the Tesla ARB. I'm not quite sure how the ARB is playing out, but Tesla's kind of gotten the hard to borrow pricing. And they also had an unfavorable article in the Wall Street Journal about, wow, surprise, Elon Musk is going to need a lot of cash to keep this whole thing going. So, and I think SpaceX used to provide a lot of that because they had a lot of government rocket contracts. So, I mean, granted, the guy made a lot of money. What was it, PayPal or something? Or Skype? I can't remember which one. He invented so many things. I know it was one of the two. But then he's certainly made like lots more money, either selling stuff to the government or getting government subsidies. So he'll probably be able to pull a rabbit out of the hat. But I find it right now that the rabbit is making it a little tougher. He's going to have to dig a little deeper here to figure out what to do if his cash flow starts getting a little squeezed.
Yeah, they're saying here, and because I was looking at some of the article, that there were other suitors for Solar City, but Tesla's offer was just too good. Funny how that works when you acquire. I believe it was his cousin's company. How their offer was so rich, so many issues to be mined there. Uncle Mike, same question for you. Maybe not Tesla related, unless you want to weigh in on the ever evolving fray that is Tesla. We talked a lot of controversy options earlier this week. Of course, VRX and a bunch of others that are top of mind, Herbalife, etc. Tesla can certainly be thrown in that boat as well. A lot of Sturm und Drang over this one. But that said, what was catching your eye? I'm guessing some of the Texas tea stuff was weighing on your mind today, sir.
It was. I mean, this has been a pretty interesting news week in that we start out the week talking about, maybe ended last week talking about EpiPens. We've shifted to Tesla. We've have Herbalife, we have Tesla, we got Apple wanting, and the Irish government ticked off at each other. I mean, this is quite a bit of news this week. And overall, considering the volume of news with which we've had, I'm actually surprised we have not had more movement in U.S. stocks. So that kind of makes me think about what could possibly happen tomorrow with the unemployment numbers, but we can talk more about that in Around the Block. Yes, the Texas tea. Listen to the story about a man named Jed who lost about 10% of his fortune over a course of just the last week if he's invested in oil. Oil has just gotten the bejeebers beat out of it lately, and with everything that's happening, oil coming down like it has, if you are of the school of thought that think that when everyone gets back from Maine, the south of France, St. Charles, and all their vacation destinations next Tuesday after Labor Day, if you're of that school of thought that the bulls are going to be coming to town, you may want to also take a look at oil as well, because of the fact that with oil as depressed as it is, it might not be a bad idea to get into that if, and only if, you're of the bullish state of mind on SPY, because I believe that if the markets do turn to the bullish side, I think oil is going to go with them. So we'll see next week, but it's been oil's. If you can't say that oil hasn't given you plenty of opportunities to get in on it this year, if you have not already.
Yeah, you certainly had the opportunities, and if you missed them, they come back, and if you miss them, they come back again. I was just, as you were talking, I was pulling up some WTI numbers, looking into how we're ending here today. Yeah, off about $1.25, about nearly 3%, depending on where you're looking in the term structure out there in WTI, but back again in the mid to low 40 handle range again after flirting ever so briefly with 50. It's been something we've been talking about on TWIFO a lot, which is, of course, our This Week in Futures Options program. Streams live every Friday, 3 p.m. Central, 4 p.m. Eastern, if you guys want to join us there. We talked a lot about this term structure of WTI, and no matter what's been going on with the rallies and the sell-offs, it still has been just a preponderance of interest out there in the puts, and that activity seems to have been merited, seems to have been well-placed, as, again, we are once again retesting the lower portion of the 40 grand. Who knows? Maybe we'll break through that mystical 40 strike again to the downside. Talking about moving to the downsides, look, we are kind of at the end of earnings season, but there are still a few names of note coming out here, including today's name/victim, good old Lululemon Athletica Inc., ticker symbol Lulu. They of sheer yoga pants infamy, closing today $76.66, pretty much unched on the day. This is the name where they were pricing in, about a little over $6 straddle, works out to about 8% or so. So they were expecting a little bit of rocking and rolling out here. Who knows, maybe a little bit more sheer yoga pants. We did, ironically, I was walking to a meeting yesterday with some colleagues, and we did notice a woman who appeared to be wearing said very sheer yoga pants. They were actually kind of see-through. So we were joking that maybe not all of those invisible yoga pants have been collected. Maybe there are still a few out there in the wild. So maybe that's what's weighing on Lulu. Either way, something is pulling them down. Like I said, they were pricing in about a a little over $6 move. And right now, they're pretty much almost delivering that, off about $5.75, about 7.5% right now, hovering right around $70.80 or so. So we'll keep an eye on that one. But Lulu has been an interesting one. Who knows? All these sheer yoga pants in the wild is perhaps that's what's weighing on the numbers out there. Speaking of the numbers, it's that time of the month, so let's get to it. It's the beginning of September. It means we look back at the month that was for August from an options volume perspective. Talking about our numbers out of our friends over there at the OCC, the Options Clearing Corp. And they announced that August was not exactly a banner month. I don't think that really comes as a surprise to anyone. August last year, of course, was just blowing the doors off. We had the August 24th incident and the subsequent thunder turmoil in the marketplace that drove a lot of volume and volatility last year. We did not have that this year, thankfully. But of course, as a result, the numbers look pretty bad compared to last year. And of course, this was just a very thin and weak August. Pretty much every day we looked at it, the numbers were well off their highs. And so it doesn't surprise anyone. The numbers for August this year, pretty light, down 24% from August of last year, which was a record high last year, 434 million contracts. This year, only 331. So a substantial difference off about 100 million contracts from last year. So that's a lot of volume, no matter how you slice it. Year to date, the numbers are slightly weaker than last year at this time, about 16 point, let's see here. About 3%, down about 3% from this time last year. So we'll see. We still have a few more months left in the year to see if we can catch that up. Exchange listed options volume, again, obviously down about 24% from last year. Year to date, again, exchange listed options volume down about 3%. Equity options volume, you want to parse it a little bit. That was only down a mere 23% from August of last year. So perhaps a ray of sunshine there. No rays of sunshine to be found, however, in the ETF and index options volume that OCC clears. ETF options volume down a whopping 30% from August of last year when they did 173 million contracts. This year, only 121, so not exactly much to speak of there. And index options, even worse, taking a huge drubbing, down 36% from August of last year. So the numbers at least come out of OCC for August not exactly lighten it up, shall we say, from an overall volume perspective. But still interesting stuff. We are back coming into September. I think once we get this week out of the way with the holidays and everything, we'll see some more numbers, more people piling back into the market. And we should see some interesting performance in September. That said, September is not historically a strong month for the market. It's dropped in September nearly 60% of the time, about 57% of the time. It's also the month of the weakest average performance. And they also say when you add in that caveat of an election year, that the monthly price declines and also the frequency of those drops are much higher in a presidential election years than, without an incumbent candidate. So you have to add in all those little caveats there. But still, we may perhaps be in store for a little action, a little volatility. The Rock Lobster is still hitting on the yoga pants there. He's fascinated with the idea of sheer invisible yoga pants. That said, Mr. Rock Lobster, is it true, the rumors are true that you are indeed over there in the Cape on a little bit of a vacation?
I'm about to leave on a vacation. So that's your little birdie was correct.
My birdies are pretty smart. So any of those numbers catch your eye over there? Any of those numbers surprise you that we were off pretty sizably from August of last year, or did you kind of expect that? I think you kind of had to see that one coming.
Well, considering last August was, let's just say, a bit of it was an excitement factory for at least the end of the month, and I don't think we moved more than 1% the entire month this August. So, and I don't think there was a day last August where we didn't move 1%. So. Yes, the volume numbers are not a tremendous surprise for me. I would almost say that I kind of expected it. And volume everything's kind of they've dried up because the Fed's killed volatility. Oh, I've already said that before. But now they're totally in control of volatility because everybody's like, okay, the only vol is going to come from the Fed. So we'll wait till they say something. If they're not saying anything, then nothing's moving. And it is scarily true.
Yeah, at least you're not as bad as Bill Gross. What did he came out with his letter to investors today? I believe he said the Fed is just manipulating markets, which is something we've been saying here on this program for quite some time, or at the very least, perhaps artificially injecting themselves on a little bit more frequent basis. I think his quote was, "They have mastered the art of market manipulation," which I think a lot of us here could certainly maybe get behind. Of course, Gross big in the fixed income world, so he's talking up his own book a little bit there. But still, it is kind of interesting to see everyone kind of collectively starting to say, enough's enough. Do something or get the heck out of the way and let us do our thing instead. And yet we have, of course, the non-farms again coming up the end of this week, so we'll see how that weighs in. Everyone's kind of playing wait and see for that. We know a lot of our listeners are also playing wait and see for the odd block, so let's not keep them waiting, Mr. Rock Lobster. Let's get right to it.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we bravely venture into those dark alleys in the options market, so you guys don't have to. You can sit at home safe and comfortable behind your keyboards or listening by your mobile devices or however you like to consume this fine program, safe in the knowledge that Andrew and I are going where angels fear to tread. Let's kick things off. An interesting one. We haven't talked about this one in a while. This is Iridium Communications Inc., ticker symbol IRDM, closing today $7.77, the auspicious $7.77, $7.77, not $700.77, listeners. So not as rich as you perhaps might like. This is our resident cheapie on the old Odd Block today, selling off pretty aggressively, selling off about 7%. So a lot of sevens out there in Iridium today. This is the name that does. By the way, if you're not familiar with them, they are indeed a satellite communications company. They're the big names in sat phones for a long time. They average a whopping 232 contracts a day. Today, doing a little bit more than that, doing 5,652 to be precise, 35-1 puts over calls. So listeners, if you pull up the chains here, you don't have a lot of strikes to choose from. It's a cheapie. So the paper today should pretty much jump off the page to you. And it was pretty much all puts all the time, as those numbers imply. What started catching our eye was a chunk, one block, going up a little bit out of sequence over there, which is always a note of caution there on the OCC 7.5 puts, 2,250 going up. Looks like paper buying for 65 cents. As the day went on, more piled into that strike, a total of 3,171. We also saw some activity going up in the SEP 7.5s, about 1,000 going up there, and 862 of the OCC 5 puts. So puts were kind of the product, the option du jour out here. Pretty much no matter where you looked, people were picking up some puts. There is some open interest there on that OCC 7.5 strike to the tune of 43.31. So potentially someone is coming in and gobbling up some closing short puts to close out on that strike, or perhaps piling in for some more. It's definitely opening on the SEPs, however. There is zero open interest there out there in Iridium. So perhaps a bit of our old friend, the time stupid, raising its ugly head again. Perhaps closing an OCC and opening in SEP, that would be odd. We don't see a lot of that. But that could certainly, it is the odd block after all. Or perhaps people just piling in on both and deciding, they need a little bit of OCC and then they have a little bit left over. Let's get some SEP as well. Either way, looking at some downside action here. This is the name that's been fairly north of the 7.5 strike, at least for the last 3 or so months, at least until last couple of sessions when it started taking it on the chin. But other than that, it's been really since, looks like about earlier this year, about April, when the last time it was at about that 7.5 level. It's been north of it ever since. So our friends out here, if it is indeed the case that they are picking up these puts to open, or if they're closing the short put, either way, they're probably concerned that there is some more downside south of that 7.5 strike to go, particularly out there with those SEPs, because those SEPs are indeed opening. So Mr. Rock Lobster, a lot to parse here. Scattered volume across multiple strikes, heavy open interest on one of those strikes, and indeed multiple months going up as well. So a lot here to kick off the odd block. What say you here to this put frenzy in Iridium?
The put frenzy is it's definitely a frenzy, but it's not like the stock went anywhere. It's almost like that the customers bought the puts and then the stock stopped. Are you kind of looking at that from the pricing? They're like, okay, maybe there's some news. We're going to jump in and buy the puts, and then the stock didn't move. I mean, it was down, but it wasn't enough for those puts to make any money. So when you're paying the dollars that they're paying in a $7.50 stock, I'm assuming they're expecting either more downside or they might be buying stock against the puts or something, but I think we're going to need a little bit more we're going to need more fireworks than we're getting on the current move. Don't you think?
Yeah, it's like the bartender says, you can't stay here. You got to go somewhere, preferably down in this case. Because if they stay here, you're right. They're paying a juicy level for a strike that hasn't been seen in a while. And you need to hit that thing. You need to hit it hard. And you need to hit it fast. And so far, at least, they had a good move today. They can keep this up, I suppose, for another couple of sessions. And those puts are looking ripe and juicy. But yeah, if they kind of do this far and no farther dance like they did today, then it doesn't look like these puts are going to be lighting up anyone's pocketbooks anytime soon. But again, there is some time. Not so much on the SEPs, but there's time on the OCS for these things to play off. So let us know what you think. Are you as bearish on the sat phone and satellite spectrum as our friend here apparently is? Let us know. Meanwhile, we were talking Texas tea there at the top of the show, so let's get into, can't have an odd block without something oil or energy related. Today's victim is Chevron. Ticker symbol CVX, closing a wee bit over $100.21 to be precise. This is the name that does decent paper, as you might imagine. It's a name you've actually heard of. Does nearly 40,000 contracts a day. Today, doing about 57,000, so a little bit richer on the volume side today. About 2.2 to 1 calls over puts. A lot of that has to do with our friend out here. It looks like he is doing the old roll out, not up and out this time, just the old straight out. It was the SEP-OC 105 call spread that went up, looks like 20,000, almost 21,000 on the SEP side versus about 10,000 on the OC side. Let's get the exact number for you. It was 10,000 and a little bit of change, so about 10,000. So it looks like a roughly 2 to 1 ratio, doing it for a dime on the SEP, 47 cents on the OC. Open interest to be found on pretty much both of these. 52,000 contracts open on the OC strike, as well as a decent amount on the SEP here, about 33,000. So more than enough to encapsulate today's volume on both of those strikes. Looks like paper was selling SEP and then lifting the offer on the OC. So it looks like perhaps that's why we thought there was rolling, closing out the SEP and then going back out to the OC. Clearly, given where the stock is right now, 100, roughly 100 even, the SEP 105 is not working out too well for them. But they reestablished at that same level. They didn't take advantage of a sell-off in the underlying to perhaps roll down to, I don't know, the pars, somewhere close to that. You have a lot more strike selection. 101s then, if you're not like the pars. Either way, maybe a strike with a little bit more meat on the bones there. They chose not to do that. It's usually also a sign when we do this, when people roll out, when they're sitting on house money, they usually do a 2-by-1. They sell one, they buy two, because they got their house money to burn. If it worked once, why wouldn't it work twice? Do it for twice the size. When they cut their size in half, also usually another sign that probably not exactly hitting a home run here on this trade. But they're not giving up either, which is interesting in and of itself. Chevron has been another one, as you might imagine, post-February, March kind of crazy period. They've been on a bit of a tear, and they were up. They've been over 100 pretty much ever since that point, with a brief flirtation back at the beginning of August. But now they've kind of been back on that 100 point. Our friend here clearly thinking that perhaps that 105 range is in his sights. They did flirt with it about 107, actually. They broke through it back on middle of July 15th. So they were up at those levels briefly. Our friend here clearly thinking they can hit that again. Mr. Rock Lobster, what say you to our friend not giving up the ghost, cutting his size in half, not really adjusting his strike at all, still staying doggedly on that 105 strike, What are your thoughts here on this ratio roll here in Chevron?
I'm feeling this is it's like a forlorn, is it forlorn hope. That's why I thought it was opening paper, because they're either, well, I guess the Ox opening, the SEP's closing, they're kind of giving up on the SEP. I think that makes sense. Normally, that looks like a closing roll, but it didn't work so well, so they're doing less. I have seen some paper going up where they sell a bunch of calls forward and then they buy the back, kind of an institutional trade, because it takes a lot of margin to do something like that. And they're trying to use that forward premium to pay for the back month. But like you said, why do you're rolling from the 105 to the 105s in October? Maybe this was Tosaw, because he's looking at a bounce in oil. Maybe he's expressing that with this 1x2 funk time spread in Chevron. What do you think? Do you think he is? Is he just kind of closeting and not letting us know he's doing this?
Uncle Mike, are you doing your time ratio stupids again, this time in Chevron?
Nah, maybe you could have caught me on that first one with the time stupid, but I actually do have some skin in the game on Chevron, but this is not me.
Yeah, I'm with you, Rock Lobster. Everything we've ever done in the odd block screams that this is someone keeping the hope alive, even though it is weak. The only thing that gives me pause, you're right, is the open interest. That shows it could be something else afoot there, but I'm going with the old gut instincts on this one that says it's someone who just can't give up the ghost. They love it. They love that 105 strike. They refuse to adjust, except from a size perspective. That's probably more something that was forced upon them than they did themselves. I'm sure they would love to do the same size yet again. Maybe their risk manager tapping them on the shoulder saying, not so many this time. Either way, interesting stuff here. We'll keep an eye on this one as we roll on to another name. It was a frequent offender in the odd block for a while. It's been a little while since we've delved into the realm of streaming audio for our friends here at Pandora. To close out the odd block today, ticker symbol, of course, P, closing $14.38. One of the few heavy up names on the day, up about nearly 3% to close, like I said, up about nearly 40 cents on the day. It's a name that does decent paper for an odd block candidate. About 10,500 contracts a day. It's been averaging today 25,000 and change, so quite a bit more. 74.7 to 1. Calls over puts, 25,407 calls, 340 puts. So we're clearly focusing on the puts today out here in Pandora. Nope, indeed, it was calls and longer term, not SEP, not OC, not even DECE, no, all the way out to Jan 2017, where we find our victim, and it was indeed the Jan 2017 18 calls going up in a good chunk, a good block, if you will, over there on ARCA for 20,000 of these bad boys. Paper buying, lifting some offers for 57 cents. Looks like that was pretty much the sum total, about 500 more or so piling in afterwards. That could have been Me Too paper. Don't know if that was the original client or not. Open interest, only 9,000 and change, so clearly this is opening paper. Worth noting, this did also go up with some stock, about 500,000 shares. So this did go up delta neutral, or if it is biased, perhaps slightly long a little bit. Either way, some interesting stuff here on good old Pandora. Fascinating to watch. This name hasn't. Let's see here. Looking back, it hasn't hit those levels in quite some time. In fact, back over you got to look back all the way to October of last year when this thing was riding high in the 20s before earnings cut it down to size and cut it back down into the pretty much the range it is now, the 13 to 14 range, where it's kind of been vacillating around, getting as low back in the crazy period of mid-February, getting as low as $8. So this thing is up nearly 50% since then, but it has been vacillating around quite a bit. Mr. Rock Lobster, take us home. What are your thoughts here on these calls and stock going up for some size in January in Pandora?
I'm thinking that to me it just looks kind of really bullish. I mean, you buy those calls, even delta neutral, the ratio is like 4-1. So I'm thinking, and again, I just more Wall Street Journal that the number one revenue now for the music industry is streaming. So obviously Pandora is one of those. So maybe somebody's getting a little upside love for it. That's what I'm thinking with that. So it's just it looks like just but they're looking for big. They're looking for mid-20s, which. I mean, it's been there before. I guess if they start pumping some numbers out and some growth, maybe it will be the preferred way to consume all things music. So definitely, it just looks like a big bullish chunk of action to me.
It's a good title for our show. Big bullish chunk of action. That is indeed what it is. Even with the call component still heavily bullish, this guy's looking for some rock'em sock'em upside, looking for this thing to retreat and retrace, I should say, back to those previous lofty levels around the 20 handle and beyond. Rock Lobster is right. He needs this thing to really knock it out of the park for these calls to come up. And Jan sounds like a long time away, but it isn't that long for this thing to put up the kind of numbers he's looking for. So if he's correct, then he needs this thing to well more than double from its lows back in February, 2.5 times probably for these things to really start paying off. So he's looking for a home run here in Pandora and putting his money where his mouth is 20,000 times. All right, listeners, that's it for the Odd Block, but it's Thursday. That means it's time for Uncle Mike to regale us with some options, wit and or wisdom. It's time for the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. Like the name implies, this is the portion of the program where we get our learning on, courtesy of Uncle Mike. And Uncle Mike, I was chatting with my minions while the Rock Lobster is talking right now. Take some time to dissect and parse their gibberish. But I did hear some whispers. It sounded like in between munching of crackers and jams and jellies, I heard whispers of something about gold, and perhaps they were pointing to their neck. So I'm going to guess either they want me to strangle them or they're going to maybe talking about collars. I'm guessing something about gold and something about collars. Maybe the two related. Are they correct, or should I beat them mercilessly yet again after the show?
As much fun as it would be to say that I'm selling naked short strangles on gold.
That would be good. That's the new Odd Block. I'm tuning in for that one. Strategy Block.
That would be fun. So with that, yes, your minions were correct in that, you got a 1 in 2 chance. Sometimes you can go with collar, sometimes you can go with strangle. So, but the minions were right yet again. They have a very impressive track record. And I'm curious why you send the birdies to spy on Andrew and you send the minions to spy on me. Am I going to ever get the birds again? Or
it's just distance. Maine's so far away. St. Charles, they can hop on the L. They can get out there pretty close and get a car and stuff. But they can do that. The birds, they got to go to Maine. Minions can't go that far.
Got it. Yeah, we do allow minions to rent cars here in St. Charles. We are a minion-friendly community, so that's good. But anyway, what I went through today, I thought this would really make a good strategy block for today to just kind of go through some collar action in terms of a real-life small loss in a collar that I'm very proud of, actually. This is one where I think just in general, as you're trying to find the legitimacy of someone who is a trader, most of the time, from my experience, the people who have been legitimate in my many years in the business oftentimes brag more about their losses than they do about their wins. People that brag about, I made 8,000% in one night. Typically, people like that are just looking to sell you some type of software product and move on with life. But, or I don't know, they got some problems. But my point is that I want to give you today a real life collar trade with which I did, and what happened with it, and why I liked it, and why I'm happy, even though it lost, in this case, a few pennies. So on June 30th, I started the trade, got back into gold, bought GLD, and we'll just go in increments of 100 shares at $126.23 a share. At the same time, I also bought a married put. Bought the September quarterly, meaning it expires on September 30th, 125 put for $3.70. I felt gold volatility was low then, and I still feel it's low now, quite honestly. So I felt comfortable being long premium. Now, my plan with this was to, if we got some type of a gain in gold, I wanted to leg into a collar, or if gold were to go down significantly, perhaps set up some type of a put spread, or there's a variety of things with which I wanted to do. When you're long premium, as I was, and as you'll find out still am, you have flexibility. You have the ability to just kind of throw some stuff against the wall and see what sticks. Now, with that, I felt that volatility was low enough to where I could be long premium, and I felt the time frame for which I bought the option was far enough out to where I could be long premium as well. It was essentially a 90-day option with which I bought on the 125 put. So time went by. Gold still did not do a whole heck of a lot. If you look at the movement of gold between June 30th and today, it's not had a very large trading range. However, in mid-August, on August 16th, I was able to sell the September 131 call, and I got $1.97 for it. Not ideal with what I was hoping, but I felt that I needed to do something because time's starting to draw towards the end here, and we need to finance this long put in one way, shape, or form. So with that, my thought was also, if gold were to continue to go higher, if we did have gold go from 126 to 131 over the course of 3 months, that's not exactly a bad thing, even with a small cost at what would have been at that stage had I done nothing with the options. So today, actually, it was more based on yesterday's movement, but I just decided to finally do it today. Gold's come down. It's around the 125 level. It actually closed today. Let me see. Give you guys the exact close, 125.29. So gold is down a little bit. It's not really that significant of a downturn, but it is down. And so what's happened is that I was able to sell a 131 covered call at a higher level. So today I closed out both the short call. I ended up getting $1.36 in profit, and the long put, and that was actually $1.65 loss. So on there, with this collar, by doing it this way, by doing stuff and making sure that we did everything that we could to do things right, we ended up taking a 29-cent loss, and that's over the course of 2 months. So for my clients that were in this gold trade, and they're pretty much constantly in gold, it's more of a longer-term style holding. For those of my clients that were in this, the cost of hedging per month, actually, and let's just assume it's just a straight 2-month trade based on start to finish, which it essentially was. So over the course of a 2-month time frame, that's 29 cents in loss. So the cost of hedging was actually 14 cents per month on GLD is what that came out to. Now, let's say GLD would have gone way down, it would have gone down 20, 30%, whatever the case may be. Well, the only risk with which we had was $1.23 between our cost basis of 126.23 and 125, and plus a little bit of cost in the options. But with that, because of the fact that I was able to close the options about a month until expiration, we still had a little bit of juice left in there. Folks, one thing that if you are buying a 3-month option, typically you want to close it out for a time decay standpoint. Usually, if we start, this was actually a little bit closer than what I usually like to play it, but when you get to about a month until expiration, which we are, that's the time with which time decay is going to really start to bite. So that's the reason with which I closed this collar today. Now, granted, I did all this as a roll and in one order, but then as soon as, let's just do it one trade at a time, I'm still in GLD, but now my protection is I am in December, the December 125 put, and I got into that for $4.01 today. Same strategy as what I did before. If gold is to go up to 140, or GLD, if it were to go up to say 140 over the course of the next month, hey, no complaints out of me. But what I'm looking to do at this point is find something or some way to finance this $4. And I have probably about 2 months to figure out exactly the ideal plan. Now, I'm not doing this because I don't know what I want to do on purpose. I'm doing this because I don't know what I'm going to do because I don't know what the market's going to do. Should the market just royally tank and GLD were to go down to, say, the 105 level, well, maybe at that stage I might just take a profit on a put and buy more shares and then maybe buy another put, let's say. Or let's say that GLD were all of a sudden we have some type of a reaction and GLD without me doing anything is at 135. Well, if that were the case, if it were to go up that fast, that quickly, maybe I'll just roll up the put and continue to do that. Or I may sell a covered call. It all depends on what the market gives you, and that is what I am patiently waiting on. So with that being said, that is the strategy block for today, the first day of September 2016.
Kicking off September strong, sir, with a good bit of strategery. And now it is Thursday. I know a lot of you guys are still used to the mail block coming on Thursday, so we got a little extra time for you. So we'll hit a few up now with a really quick Thursday special edition of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys take the reins. Lately, the live guys have been kind of hijacking it, haven't had a chance to get to all of our email and Twitters and other types of sources. We'll see if we can get to a few of those now. Burn through some of those guys who've been waiting for a while, like Richard Russell here. He's got an interesting question. I guess you can read it a number of different ways. He says, my question for the option block. Can you explain in detail how you use the spread trade parameters to predict the anticipated underlying movement at expiration? And that's it. That's all he says. So not really sure what the heck he's talking about here. There's a couple of different ways you could read this. He could be talking about our old friend's spread trade, which was a educational system, a.k.a. a scam, out in Utah, I believe, that got shut down by the government. Hopefully he's not talking about whatever parameters they used to spew out there, because that certainly was a bunch of nonsense. And I don't think they went to jail, but they had some issues with the regulators, shall we say, as a result. Or you can mean, in general, just talking about, your typical Greeks on a normal spread, so your delta, your gamma, your theta, your vega on a particular spread. He doesn't say which spreads he's talking about or which underlyings. So I'm not sure how we can answer this one. Rock Lobster, I'll let you try. What do you want to say to our friend here, Richard Russell, who wants to know how you use these spread trade parameters to predict anticipated underlying movement at expiration? He's very specific on that part, none of the rest, though.
I think I wish I thought I could use spread trade parameters to predict where the underlying price was going, because I think that would be a really lucrative thing to do. I think what you need to do is decide where you think the underlying is going and then pick your spread trade parameters. I think it works that way. I don't think it works the other way around. So that at least is how maybe Tosaw has a little different thought, but I try to get a sense of where it's going. And in general, what I do is I try to own the options where I am, and I try to sell the options where I'm going to, and that's how I create various and sundry spreads. So if that helps, but I don't think it's the answer he wants.
Various and sundry. That's a lot of spreads. I think that's a good shorthand way to do it. If our friend's looking here and saying, oh, the 5% vertical call spread is only a 35 delta, I got to pick that up. That's a little bit backwards way to do it. But to each their own. Maybe Fred, or his name wasn't Fred, his name was Richard, can write in with more details of what the heck he was actually talking about. I like some of the silly questions that filter in every now and then, too. We got one here. Let's see. We got time for about one more. This one comes from Fred. Here's a quick one. Can you talk about how you assemble a watch list for options trades, including individual stocks and options trades? Well, I can start with how we do it. Obviously, our use case is a little bit different here on the network. We're looking for a lot of names. We profile a lot of unusual activity, do a lot of analysis that way. So we're typically scanning and researching and building watch lists out of a lot of the names we talk about on days like today, ones that are exhibiting unusual activity, high volume, high changes in open interest, that sort of thing. And then we build a watch list out of those. So our watch list is typically going to be skewed towards a lot of those kind of aberrant and unusual names. That's the business we're in. We're parsing a lot of that data on a regular basis. And I'm looking at my watch list right now. It's enormous and filled with a lot of names we've profiled over the months and years here on the Odd Block. I probably should clean it out a little bit. It's kind of dense. I have to scroll through it on multiple pages to get everything. So it's not really much of a watch list as much as it is just a massive spreadsheet. So maybe I should parse it a little bit. But that said, that's how a lot of our names filter in to our own personal. And yeah, personal watch lists are a different thing. Obviously, you have to have some sort of outlook on the underlying or volatility, and you're going to put those names in. But for us, it all starts with those kind of parameters that we're scanning. And then once we find some interesting ones, we keep them in the watch list and we update them and we tell you guys about them on a regular basis. And it makes for good, compelling radio. Mr. Uncle Mike, what do you do when you're assembling a watch list for options trades, including individual stocks and option trades? A little redundant there, but I think you can handle it.
Allow me to, I'll even tell you every one of my watch lists right now. I have the one watch list with which I have what I typically spend most of my time trading, which would be SPY, GLD. I still let Apple stay on there, even though I really don't do too much with it anymore. But just I don't see how you can have a list without Apple on it, by all means. But that's my number one watch list. I have put oil and XLE onto that watch list in recent times. Also the VIX, FXI, and that's just basically what I trade and what I need to know what's going on. That's the main watch list. I'd say that's probably 90% of my watch list looking is on that list. The next list is a list of some blue chip stocks with which I will be in, just maybe selling some covered calls on, just maybe to look at. Typically blue chips, it's really nothing too special. But for the most part, that's more of the things that I'm more passive with. Nothing that's really too nothing I really need to look at every single day. The third list that I'll look at is if probably my longest list, whenever a client calls me and says, what about this stock? And I always just add it in there. And so that's just kind of another list with which I have. And then the other list that I am just going through my watch list here on live radio, and then my futures watch list. That way, if I want to know what's going on with oil, with the E-mini, with natural gas, with the 10-year note, that's the other one with which I'll look at, and that's pretty much what I do. I would say that 90% of my time is spent analyzing options on SPY, and I'll also look at SPX. But for the most part, I am very specialized in SPY because when you trade SPY, you're trading 80% of all commerce in the United States, all business and commerce in the United States.
Mr. Rocklops, I think you had a follow-up. Crickets. You're hearing crickets.
I did. I'm sorry about the crickets, but
not making me feel good after that.
That was a bit of subtle commentary there.
Tucson did such a good job that the crickets all jumped out. No, I think for Richard, one thing he might look at is he might look at volatility, and and the at the money straddle might help him because at least that's what the market is predicting. The most likely range for the underlying is. So that could help him when he's looking at trying to set up spreads. If the market is looking for a $1 move over the term and you're buying a spread that's $5 out of the money, you might have trouble with that spread trying to get anything done, or make you any money. So that might be a help for Richard. And as far as watch lists go, we usually look around. It kind of sounds like Tucson, not too much different. We have about 30 other names that we look at, and then basically what pops up on the list, if there's enough volatility or any kind of juice to sell that might be interesting, on a given day. So, but what I recommend is just what Mike did: is specialize in certain things and understand where those products. Understand the products that you want to trade, which means, like Mike is doing, you have to look at relatively finite numbers and get to know them well.
Well said, sir, and hard for you to say because I think someone else is trying to horn in on the internet. Either that or your scheduled allotment of internet bandwidth in Maine is coming to an end because you're going on vacation. So we'll head on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's dive back in. Looking at one more recap here of our good friend of invisible yoga pants fame, Lululemon, hovering right around the 70 handle, even actually 70.05, off about $6.60, about over 8.5%. So outperforming its straddle to the downside. Again, haven't had a chance to parse exactly why. So we're just going to go with the too many invisible yoga pants out there crushing the stock, because that's just a fun story to put out there. Also, of course, what people are really watching for tomorrow is ye old non-farms raising its head yet again. We didn't mention much about VIX today. VIX cash hovering right around 13.5, staying a little juicy ahead of tomorrow's number, but I wouldn't be surprised once the number comes out, unless it's just Barnes burner in one direction or the other, that we're going to start seeing that weekend come out pretty aggressively, and I wouldn't be surprised to see VIX cash start to give up some of that juice, because today actually we had a little bit of a range, but aside from these last couple sessions, realized vol not really where it's at right now. So who knows if these levels right now are where we should be, but we shall see tomorrow. But that said, Mr. Rock Lobster, we'll start with you before your internet cuts out. What are you watching for the rest of this week into the weekend?
I'm watching to see if we can get some new lows in the vol products, to see if we can drive those futures down a little lower. And if, again, this non-farm payroll, I mean, can it really be that good to really move the market anywhere? I don't see it. I guess it could happen, but I think ultimately it'll be some sort of sigh of relief, and we probably rally next week. But tomorrow, I'm still thinking it's a big ho-hum again, unless it's some shocking number, which, again, would be a surprise.
Indeed, I love the crickets. It's a great little accompaniment to our show. You're already hitting the camping trail. Uncle Mike, what are you watching for the rest of the week, sir?
Of course, non-farm tomorrow at 7:30 a.m. Chicago time. Always fun to watch to see what the market reaction is to that. And also, of course, oil, like I talked about in the top of the show. But one thing that we have not done yet is we have not touched 2,200 on the SPX. The SPX forgot to touch 2,200 before it started leveling out. So curious to see if maybe not tomorrow. We'd have to have a 30-point day tomorrow, so I'm not seeing that happening, but you never know. But 2,200 is the number that I am looking at to see if we can touch it.
As glorious as those crickets are. And I do love them. Unfortunately, this journey through the realm of the option block has come to a close. What a journey it's been. A lot of cool stuff for you guys to enjoy here on the old program. Before we even get to that, let's get back really quick before the internet kicks him out of Maine. Mr. Rock Lobster, what's coming down the pike in the land of the pit?
We'll be having a VIX class, more calendar classes for our Saturday classes. Look for them soon.
There you go, optionpit.com to learn more. And Uncle Mike, what are you watching? Well, we already did that. What are you watching? What's coming down the pike in the land of RCM?
Typically, fall is when probably the busiest time of year for us in terms of new clients. So if you are interested in working with RCM in some way, shape, or form, looking for an advisor who is not fearful of options, feel free to contact me at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
Whoa, and just like that, Uncle Mike is gone. I guess he lost the internet connection out there in good old scenic and lovely St. Charles as well. But it has been a fun show. We had a great array of topics, great fun stuff coming down the pike here on the network as well. So if you're staying tuned, of course, we have Vol Views coming up noon Central, 1 p.m. Eastern tomorrow. TWIFO, 3 p.m. Central, 4 p.m. Eastern if you are joining us live. And a lot of great interviews coming down the pike on the network this week as well. Had a great trading tech talk we just put in the can today with the founder of StockTwits, Howard Linzon. Met with Tony Saliba earlier this week for some great interviews as well. So a lot of great interviews coming down the pike for you guys. Stay tuned to the network this week for all of those, and we'll see you next week for more here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.